All right, good morning, everybody. Good morning, good morning. You ever look down at the clock and go, holy smokes, I'm supposed to be somewhere? I did that this morning. Lots of fun. Good morning, Vittorio. Hey, good to see you in here. Gary, how you feeling, bud? Hopefully on that road to recovery. Man, I'm excited about today. Market is moving, isn't it? Um, I feel like we have had to do a lot of watching, a lot of chart reading, and not nearly as much trading in the last couple days. But that news got things rolling, didn't it? Feels good. Holding your fire. I like it. Just watching the action. Good stuff. Um, all right, guys, let's take a look. We got 17 of you in here as we're working through. I spent a little bit of my morning making some pictures for you guys. Everything that I do, I try to keep as simple as possible, guys, and simple only happens through repetition. Um, so I wanted to make sure that you guys knew that if you need me to slow down, if you need me to kind of recover something, it's okay. I can't stress that enough. And I know it's one of those things people are like, yeah, no, whatever, it's cool. I don't want to be a bother. Guys, I want you to be a bother, even though actually you're not one. I want you to embrace that this is your class, and this class is designed for new people. And there are more experienced people posting trades in here. And guys, we're refining what they're doing as they grow with the software. But my number one goal of this classroom is to help you build a foundation, to take my newer users and make sure that you understand the foundational concepts so that you can become one of those people that we start refining. Guys, give me a Y if you can hear me. You guys got me, or do I need to reboot? All right. All right, guys. Did that work? Can you hear me? Nope. Give me 1 second. All right, guys. That appeared to boot everybody out. I apologize for that. Can you hear me if you are back with me here? Did we get audio back now? We're good? Okay. Right now, everyone's like, man, what just happened? Sorry, guys. Sometimes Discord has a mind of its own. Um, I'm not sure where I was when you lost audio, but the long and the short of it is this is a class for beginners. And then the focus will stay on beginners. And then you guys that are a little more experienced, I got you. We're going to talk about it. Don't you show me cute puppies on a Wednesday. Um, so keep that in mind, guys. And I want to throw out a formal invitation too. If you are one of those people that struggles, and I know this isn't really public speaking because it's virtual, um, my email works. Marshall can't hear me, guys. Is the audio out again? Connection locked. Okay, 1 sec. All right, guys, trying again. Are we there? Any audio? Do we have sound? Someone give me a Y. If you can hear me. No? Son of a bitch. All right, guys, can you hear me? Did we get that audio back? I tried a full reboot of Discord here. Good. Well, at least I know that it's not my microphone. Discord's giving us some challenges today. Guys, I apologize for that. Hopefully it sticks with us this time. Full reboot. That's always a wonderful thing. That's always my answer for everything, right? Reboot. Just reboot. See what happens. So, guys, let's go through patterns, routines. Let's talk about things. We're going to stay focused on simplicity today. I spent a little time this morning making some pretty cool pictures for you guys for our termination conditions. Yesterday was very enlightening for me. We had some great opportunities yesterday, some fantastic discussions. And anytime those come up through your questions, guys, I may adjust my lessons a little bit because it lets me know that there's a little bit of clarity that's not coming through. But before we do anything, guys, let's talk about routines. My morning routine, I wake up, I grab a cup of coffee, I come into my computer, and I go through my Ninja 8 stability stuff. If you're using NinjaTrader 8, guys, this is going to walk you through how to put it in its most stable state. Go through it, take a look. If you have questions, let us know. But this is something that I do every morning just because NinjaTrader 8's a workhorse, right? So I'm getting everything as efficient as I can. And then I go and I take a look at news, Forex Factory. And this morning we had some big ones, right? CPI. I don't know what CPI is. We had core CPI, CPI, yes, yes, CPI, I don't know what these mean, but what I do know is that they're high impact. And when you have a high impact news, it can move the market. And if you were watching the market this morning, it definitely did. There was some giddy up and some zip behind it. And my brain doesn't work fast enough to keep up with news. So I choose not to trade in it. That's when I go grab a second cup of coffee. That's when I don't know, take pictures for you guys is what I was doing this morning. 10:30 a.m. today, if you're a crude oil trader, we do have crude oil inventories. Always a potential market mover. There's your 10-year bond auction at 1:01 p.m. because 1 was just too soon. But it is medium impact, so it may move the market, guys. And all we're doing is we're not worrying about what they say. We're worrying about when they say it because there could be a reaction. And then everything that I talk about every day, and if you've been in this class more than a day, you realize that the first hour really is the same thing. Hey, John P., nice to see you this morning. And the same thing revolves around, and guys, I'm going to slow roll it today. I hope that's cool. Our first hour revolves around a high probability trend trade, guys, focusing on the rules, but not just the rules. I want you to embrace the fact that the rules provide advantages. Your high probability trend trade is a trade where all of your indicators line up for the trade. Strongest triggers, nothing in the way between you and your entries. Guys, this high probability trade should be the focus for a brand new user. This high probability trend trade is a trade that typically wins 70-80% of the time. Even in the manual, it says your first 30 days, focus on that high probability trend trade. that one that's happening after a termination condition on the 13.2. Guys, this is your recipe for success in the very beginning because a high probability trend trade consists of three advantages. And those three advantages come together to create a trade. So you don't have a trade until you have momentum, a clear path, and an entry area. The high probability trend trade teaches you to recognize these advantages. And it teaches you to recognize them by turning you magically into a chart reader. Because 90%, and guys, this is such a real number, if it's not low, 90% of what you do during the day is going to be reading your charts, guys. It's going to be looking at your indicators, and it's going to be understanding whether or not the advantages are present to get you to that 10% where you're actually trading the markets. Your chart reading mastery is going to incorporate three essential elements. You're going to be able to open up your charts, take a look, and understand where the market is likely to go, where the market is likely to continue, and where the market is likely to stop. And you're going to use those points very specifically. You're going to use the areas where the market is likely to continue for entries on a high probability trend trade, or really any trade that you take. You're going to be entering the market at a continuation point. You'll be able to identify this through your chart reading. You're going to be able to build a management plan around where the market is likely to go using Fibonacci, using momentum to create smart targets as you grow with the software. And then you'll be able to understand where the market is likely to stop, guys. And we call these termination conditions. And a termination condition is simply an area that when price reaches it, it may react large enough because it's typically a key Fibonacci area. It may react large enough to pull you out of a position, or it may reverse the market completely. And these likely to stop areas, these termination conditions, become the anchor point for that highest probability trend trade. When you have a termination condition that creates that full reversal in the market, it goes from down to up, or it goes from up to down, and then you find that high probability trend trade that we're about to talk about after that termination condition, guys, this is your best chance of success. So we're going to take these three trading rules, right? The three advantages that they provide, momentum, a clear path, and an entry area. And again, in the spirit of simplicity, we're going to keep these three rules focused in on only two charts, guys. And your first two rules are going to happen on the 13.2. This is your largest, this is your slowest chart. This is like a broad stroke of a brush, giving you the overall look of what the market is doing. This large chart reflects the large crowd mentality. You'll be able to recognize the trend of the market. If the background is green on your 13.2, you're in an uptrend. You're only looking for rules to be met for high probability trend trades long. If the background is red, you're in a downtrend. You're only looking for rules to be met for high probability trend trades short. Guys, let me show you just how fast that recognition comes. You ready? We're in a downtrend. Only looking for rules to be met for high probability trend trades short. We're in an uptrend. Only looking for rules to be met for high probability trend trades long. It's really that simple, guys, and this becomes the first advantage that you're going to give yourself is trading with the trend, especially because we're going to be looking for high probability trend trades. Next, rule number one has to be met, and that's going to be strong triggers, and that's going to be that advantage of momentum. And then rule number two has to be met on a 13.2. No termination conditions. No area is likely to stop the market, and this is going to provide you the advantage of a clear path. When these two rules come together, when they've been proven true, this is when you're going to turn your attention to the 5-1 chart, guys, and this becomes your entry chart. You're going to refine that broad stroke of a brush. You're going to take that overall look of the market, and you're going to whittle it down and pinpoint it to that area where the market is likely to continue. And this is where rule number three comes in to get you into the market. And you're going to use a limit order, and you're going to buy or sell a pullback at an area inside of favorable large triggers. And this is going to provide you that advantage of the entry where the market is most likely to continue. And by embracing rule number three on this smaller, faster chart, it's going to allow you to reduce risk and maximize your profit potential. taking the advantages from the 13.2 and finding an entry on your 5.1 because of the advantages provided, guys. So let's keep it simple, let's keep it focused, and let's really just establish a foundation so that you can grow. And then here's your ray of light at the end of the tunnel. Your ability to recognize a high probability trend trade, guys, your ability to learn to read your charts is going to open doors for you. And these are the trades that a lot of you are seeing these more experienced people take. And this is going to be a trade that even the newest user is going to work their way into. And it's what we call a medium probability trade. And this is going to be defined as when most of your indicators line up for a trade. However, a small issue exists. Your ability to read your charts is going to identify this small issue. It's imperative that you understand that small issue singular here. We're not going to start waiving our rights to advantages and still taking trades. One small issue may exist, and this may be the vast majority of your trades. But when you're executing medium probability trades, you're going to take them and you're going to manage them assertively. Your ability to read your indicators, to read your charts, is going to allow you to manage them assertively. If there's trouble in the way, your chart reading is going to identify that trouble. It's going to allow you to take a portion of the position off at that trouble spot and reduce to a zero loss level. So we're going to focus on high probability, and it's going to work you into medium probability. And then it just becomes a matter of repetition, guys, over and over. Recognizing the looks, recognizing the advantages, and then taking a trade based on those advantages. And I'm going to show you here your path to becoming a confident trader ASAP, guys. This is time tested and proven. And it starts with posting your trades in class, guys. This is where the magic really happens. Every time you take a trade, you're posting in class. Every time you read a chart and have a question, you're posting in class, guys. When you downloaded the software, you were given TechSmith Capture. It's part of the download bundle. And when you have TechSmith Capture, guys, it allows us to have a conversation. If any of you need a tutorial, it's really very simple. It's a big red button that I click Capture, and it's a click and drag tool. I can just click and drag, highlight the areas that I want, and when I release that mouse, it's going to let me take a picture. This picture is how you and I have a conversation. You're going to be able to use shapes to point out areas on the market maybe you have questions about. You're going to be able to use arrows. Here's my entry, here's my advantage. But the most important thing that you can do, guys, is use this call out button. Write your rules on the chart, because what you're doing is not only telling me why you did what you did, you're reinforcing your ability to follow your rules. You're reinforcing that you do recognize strong triggers, that you do understand termination conditions, and that you are able to enter at the area inside of favorable large triggers. Once you've taken a chart, and guys, I'm telling you, it can be before the trade happens, it can be from during the trade, it can be from after the trade, it can be your rules not met. So you decided to take a picture and say, hey, you know what, I don't have a clear path, therefore I'm not taking a trade. You're going to be able to upload with that blue button, and it's going to give you a link. It's going to drop that picture in the screencast cloud, and then once I click copy, it goes to my clipboard, and guys, I'll come straight to the room. If you're in the pop out, you have to hit Control V, otherwise it's just copy paste. I click enter, and then you just wait patiently for me to get to your picture, to click on it, to bring it up, so that you can get the feedback on whatever it is you're doing. The second part of that, the two most important steps, is tracking your performance in a spreadsheet, guys, using a trade journal and making sure that every time you pull the trigger, you're putting that trade into your trade journal, guys. This becomes your ability to recognize patterns. This is going to reinforce your ability to follow rules. You're going to understand when you are being aggressive, when you're getting outside of the rules, when you're forfeiting advantages. I'm going to be able to see it as well. We're going to recognize that pattern. We're going to correct it together, guys. So when you're using the spreadsheet, put in the date. It's fun to watch your progress. What kind of trade was it? Well, it was a trend trade. How are you feeling? This reflects a lot your comfort level. Or if you were bored, maybe you were breaking rules because you just wished you were in a trade, right? You're going to identify the conditions of the market. You're going to identify the conditions of your trigger line. You're going to identify the conditions on your entry chart. And then you'll be able to go through, did I win? Did I lose? I was bored and I lost both of these, right? And what was the rules that I broke? Maybe I traded into a termination condition. So I can see this, I can recognize it, and I can come back and learn to correct that behavior. The next side is as you're learning your rules. As you're learning your rules, you're going to go in and you're going to start identifying these perfect entries, identifying these advantages, and you're going to put them into your personal trade setups, guys. The best of the best right there. And you're going to be able to come back and study this each and every morning. And I think that one of the paths is using that spreadsheet and then coming back each morning and reinvesting yourself into the education that you had yesterday. And studying each and every picture that you took so that you can be a better trader today. And then what we're going to do in class in this first hour, or as long as it takes, is we're going to begin by learning the trigger line and Fibonacci rules for when it's okay to trade, guys. This is you're on your path. And I'm going to do this. We're going to talk about it. We're going to talk about it in pictures. We're going to look at the live market, and we're just going to reinforce these looks. Your job is to simulate your trades daily, to keep posting those pictures in class until you're sure that you have the correct rules. Avoid the temptation of breaking your rules for the sake of making money, because while it feels like a short-term victory, guys, it's typically a path to long-term failure. Embrace the advantages, focus on your rules, and simplify. It's my favorite word, simplify. Simplify one trade. Give me 20 days focusing on entries for a high probability trend trade. From there, you're going to grow exponentially. Study the looks so that they become easy. Guys, here's your looks. You have access to this spreadsheet. It's about 170 pictures of rules-based entries on this spreadsheet. And then you can go back after class the next day and you can download replay data, guys, and you can go back and you can retrade the day. You can fix your mistakes. You can put yourself skipping the trades that you shouldn't have taken the trades that you should have taken. And, you know, it's all about repetitions. How do you double your repetitions? How do you get a year's worth of knowledge in 6 months? Use market replay. You go back and you kind of reaffirm what you're doing. Take pictures of those correct trades when you're using market replay. Guys, bring me your replay pictures to class. I've had clients that have brought me 10 to 15 pictures a day of their market replay work that they had questions on. And just going to repeat this process every day until you are always taking the correct trades, guys. And if your rules have been proven through back testing, through study, through repetition, if they have been proven to provide a statistical advantage, if your rules have been proven to win more than they lose, when you're always taking the correct trades, you should be guaranteeing yourself that you can make money. And that's when you go to one of those prop firms and you give them a small fee and you trade their money and you test your plan out. But this is what we're going to focus on today, guys. We're going to focus on the path. I strayed from the path when I was brand new. I never took pictures. I didn't participate in class. And it cost me about $5,000 almost instantly. Don't be like me. Let's start learning to read trigger lines, guys. And it begins with identifying the trend. And we're using these T3 trigger lines, guys, and there's two parts to them. There's the small trigger lines. These are your faster triggers. And then there's your large trigger line. That's going to be this dash trigger line. And we're talking about really any chart right now. When the small triggers cross above the large triggers, the background color is going to turn green. It's going to let you know that you're in an uptrend. And you'll begin looking for your rules to be met for high probability trend trades long. When your small triggers break below the large triggers, background paints red. You know you're in a downtrend. You're only looking for rules to be met for high probability trend trade short. Guys, that's the first advantage that you're going to give yourself, and it's pretty simple, just paying attention to that background color. Rule number 1 says that we must have strong trigger lines on the 13-2. Strong trigger lines, this is your picture. Strong trigger lines means, and you know what, I've even got a more simple picture. Let's keep it as simple as we can. Strong trigger lines means in a downtrend, your small triggers are below the large triggers. Both are wide, angled in the direction of the trend, guys. The space created between the small and the large lets me know that the odds are favorable for the market to continue down, guys. And when the odds are favorable, conditions are primed for you to sell a pullback at Fibonacci on your 5-1 chart. And that's what this tail represents. This is that smaller chart movement getting you to the perfect entry. In an uptrend, small triggers are above the large triggers. The large triggers are wide. They're angled in the direction of the trend. Once again, it's that space created between the small and the large that lets you know that the odds are favorable for the market to continue in the direction of the trend. So guys, in the name of simplicity, odds favorable momentum, it's that separation between small and large in the direction of the trend. This is rule number 1. This is that rule that's providing you the advantage of momentum. Are you guys good with this one? Can you give me a Y in the room if you're with me? Strong triggers provide momentum, guys. Momentum puts you in a position where the market is likely to continue in the direction of the trend. Well, the opposite of strong is going to be weak, right? So let's be able to recognize weak triggers. We're not trading them because it doesn't provide the advantage of momentum. When those small triggers work their way back inside of the large triggers, we call this a weakening of the large triggers. And this weakening of the large triggers means that anything can happen up or down. It goes from advantageous momentum to kind of a crapshoot, right? A roll of the dice. And you're going to see this throughout the day. Your momentum is going to change throughout the day. So this is where your patience comes in. 90% of what you do is going to be reading your indicators, waiting for an advantage. Anything can happen triggers. You'll notice that this happens right at a market reversal. It provides you odds favorable momentum. You're going to hear that in class a lot. Your best of the best trigger look provides that OFM, that odds favorable momentum. And there's one of those tails, one of those potential pullbacks, and the market ultimately continues in the direction of the trend. The triggers weaken again. We can see that as a reversal point, providing odds favorable. That's in the middle of the night. That's what that line means. Odds favorable again over here. Weak triggers up top where the market's turning. And then sometimes your large and small aren't going to agree. Your large are down, your small are up. Both trigger lines appear to be down, but the small are on the wrong side of the large. These say down, trend says up. Guys, this is where new users, actually even experienced users, try to predict what the market's going to do. Well, the background is green, but the triggers are down. I'm guessing long, and they find themselves stopped out. Well, the triggers are red, even though the background is green. I'm guessing short, and they find themselves stopped out. So being able to recognize this advantage and recognizing when the advantage isn't present is going to keep you on the right path, guys, as you look for that high probability trend trade, focusing on the advantage of momentum. And I can't stress enough how much momentum helps a trade. So this is rule number 1, guys. Odds favorable momentum. Putting yourself in a position where the market is likely to continue in the direction of the trade, providing yourself the advantage of momentum. Rule number 2 says don't trade into termination conditions. Termination conditions must be false. Room to profit targets are true. This is going to provide you the advantage of a clear path. And this clear path really gives you the opportunity. You're driving down the highway, West Texas, nothing but tumbleweeds, nothing in your way. And identifying a clear path is a 2-part process. And the first thing that happens is price reaches an area. Whoops, that's not the picture that I wanted to look at. Price is going to reach an area. Um, and these are the areas that price must reach in order to determine whether or not we're coming into a termination condition. Those areas can be divergence highs and lows. When the market creates a pivot and there's a loss of momentum, this cyan line prints from a divergence low. It means there's a loss of momentum in the market. This magenta line prints from a high. But in order for this line or this line to be a termination condition, price must reach it. So price must come back and reach one of these key areas. The formation of a divergence low is not a termination condition. It's just a pivot. So red resistance, blue support as well, and these yellow one-to-ones. And we're going to talk about that divergence line a little bit because I had some great insight yesterday on how that can be a little bit confusing. So we're going to talk about it a little more today. These are the areas, I'm going to put them in the room for you, that may create a termination. There's a two-part process to identifying a termination condition. And this is some of the work that I did for you this morning. And I hope it makes sense. So the first thing that has to happen is price reaches an area, meaning that your price bars, these dynamic Renko bars, trade down and reach an area of support, right? Reach an area of resistance, reach one-to-ones, reach a divergence high, reach a divergence low. That's the first step in identifying a termination condition. The second step is asking yourself, where are the trigger lines? And if those trigger lines remain above the area that's been reached at support, well, then we've reached a termination condition. We no longer have the advantage of a clear path. And because we don't have the advantage of a clear path, no short trades into this area. And we'll go through the manual real quick. Price comes down and it creates one of these divergence lows, guys. This is nothing more than a pivot. This is not a termination condition because trigger lines have exceeded. It's when price returns and reaches that divergence low, and you ask yourself, where are the trigger lines? Well, if they all remain above, now we have a termination condition based on the price of this pivot where there was a loss of momentum. This is what we call a pivot stop out, guys, and this can be a powerful look to reverse the market. And you'll see it from lows, and then when you see that same divergence high get reached, the triggers remain below. This is a pivot stop out of a divergence high, guys, and these pivot stop outs become very powerful when they happen at Fibonacci. A pivot stop out on its own may terminate the trend. A pivot stop out at Fibonacci is more likely to terminate the trend. So going through that simple two-part process, if price reaches an area, absolutely no trigger lines go through. We're not looking for longs into this area of resistance because it may stop the market. Price pulls all the way back to support. Absolutely none of your trigger lines have even threatened to break support. Not taking short trades into this area because it is likely to stop the market, guys. 90% of what you do is waiting for that advantage. You can see that the market comes back up. We get one of those pivot stop outs where price reaches a divergence high and none of the triggers break. We have two areas of resistance that have been reached and the triggers still don't come in. So that pivot stop out at divergence high becomes a very powerful termination condition. And you can see that your large triggers go from green to red. Your small triggers go from green to red below, and ultimately it gives us odds favorable momentum. A strong top is a termination condition that creates a full reversal from a high. And this strong top is the anchor for that highest probability trend trade short. When a termination condition from a high creates a full reversal, provides odds favorable momentum, this is your best of the best look, setting you up for a short trade. When a termination condition price reaches those one-to-ones, even with the odds favorable momentum, you ask yourself, how many trigger lines have broken through? Absolutely none. Therefore, no more short trades. Rule number 2 keeps you safe here. Well, this termination creates a full reversal. The small triggers go to the other side of the large, painting the background green. The large triggers go from red to green, and ultimately gives us odds favorable momentum. Smalls working their way outside of those large, and there's another one of those tails for the highest probability trend trade coming from what we call a strong bottom. A strong bottom means that none of your trigger lines have breached the area. A strong top means that none of your trigger lines have breached the area. Is everybody comfortable with the two-part process? Price reaches an area, absolutely no trigger lines break through. We're not looking for trades into that area. And guys, I took some pictures for you today. And I just wanted to kind of reinforce termination conditions at a high. I started with that divergence high, right? This is just a pivot. When price retests the pivot, that divergence high, now it's a termination condition. Absolutely none of the trigger lines break through. Price reaches the area, absolutely no trigger lines break through. I don't have the advantage of a clear path. Price reaches those one-to-ones. Guys, I tried to use examples of everything here. It's a termination condition. So put this one in your spreadsheet. Hopefully it helps you a little bit. I also took pictures from lows. Price reaches those one-to-ones. Absolutely no trigger lines break through. This is an area likely to stop the market, and you can see that it is in fact a strong bottom because it creates a full reversal in odds favorable momentum. Once again, price comes down to Fibonacci support to the tick, guys. Absolutely none of your trigger lines break through. This termination creates a full reversal. This full reversal gives me odds favorable. There's another one of those tails. And then there's this divergence low. Divergence prints, it's only a pivot. It's when price comes back and retests that pivot low. None of the triggers break through. Now it becomes a termination condition. Is everybody comfortable with this? Two-part process. Price reaches. Guys, there's some great pictures for your spreadsheet. Price reaches the area. No triggers go through. No longer a clear path. And then guys, there's one more termination condition that I want to talk about, and that's 3 divergence from the same location. And you're going to use this on a smaller, faster chart to identify these points on the 13.2 when you can't see the slowdown because it is such a broad stroke of a brush. We can use 3 divergences. 3 losses of momentum in the same price range may terminate the trend. And this is a very powerful condition when that third divergence happens with the small triggers inside of the large triggers. So on its own, 3 divergences may terminate the trend. It becomes more powerful when you have those anything can happen triggers coupled with the third divergence. And guys, it becomes even more powerful still when there's a head and shoulders, when that last pivot, that third pivot is higher than the previous from a low or lower than the previous from a high. So this is a pattern that you can recognize. I'll give you this one as well, guys. I steal things from the manual all the time. This is a look that you can recognize from a low or from a high. When that 13.2 maybe has already exceeded the areas, or that 13.2 hasn't quite made it to the areas, these divergences on a smaller, faster chart will help you identify that change. And guys, that's rule number 2. That's your clear path. That is your advantage that's going to set you up to hunt for an entry, guys. 13.2 chart has already provided momentum. 13.2 chart has now provided a clear path. The only thing left to do is identify that area where the market is likely to continue. And I'm going to show you a picture of why we're coupling the two. I've got this picture and it's labeled refinement. What happens in one bar on the 13.2, that one bar that gives us odds favorable, that one bar that gives us no terminations, is a culmination of about 15 to 30 bars. Over here on the 5.1, all of this price action happens inside of one bar, and that's what allows us to refine, to recognize that continuation point and give you that advantage. So when the rules are met on the 13.2 in an uptrend, this is your look on the 5.1. Triggers should be strong. Small triggers above the large triggers. Large triggers are wide. They're angled in the direction of the trend. Your synthetic triggers are working in symphony with your large triggers, creating what we call favorable large triggers, guys. And this happens when the synthetics, those stepped looking triggers, they are large triggers from the 13.2. We call them synthetic because they've been transferred over to your 5.1 from that higher time frame. When they work harmoniously with the large triggers, when the two are overlapped, trending one on top of the other, this is your best of the best look. And what it does is it creates your smallest window of opportunity. And guys, the smallest window of opportunity creates the least amount of risk. It creates the greatest potential for profit. So rule number 3 says that we are going to use a limit order. We're going to wait for the market to come to us. We're going to buy or sell a pullback at an area inside of favorable large triggers. So on our 5.1, when the rules are met on the 13.2, we're going to focus our attention on those large triggers, those synthetic triggers. They should be up, strong, like a shark about to breach. And you're going to start looking for the areas that are falling within. Your areas that originate a high probability trend trade can be Fibonacci support or resistance, mid bands, or one-to-ones, or it can be any combination of the three. And when they all fall in the same location, it just adds a little power. But because we're going to buy a pullback, we need, with everything going up in the market, we need that market to come down to us. We're going to create a window of opportunity when that pullback begins, and the pullback begins with a reversal bar. This reversal bar signals the beginning of the pullback, and at that time, I'm going to identify the areas inside of my favorable large triggers, guys. I have 2 areas of Fibonacci support. I have a mid band that's a tick or 2 above, but these trigger lines are working their way up strong. They're moving averages. And if your mid band is a tick or 2 above, the odds are favorable that it's going to get swallowed up by those large triggers. And then I also have one-to-ones down here at the bottom. And what I've done is I've drawn a box around those areas inside of favorable large triggers. And this is my window of opportunity. For a long trade, your window of opportunity extends from your highest point of support to your lowest point of support inside of favorable large triggers. Because this support is outside of the window or outside of the large triggers, guys, it is not inside of your window of opportunity. Only the areas enveloped by those triggers. Reversal bar prints. I have both a mid band and one-to-ones inside of those favorable large triggers. This teal shaded area identifies the window of opportunity, that area where the market is likely to continue. My job is to activate a limit order at the top of that window, and it's also to ignore this Fibonacci support outside of the large triggers. And guys, go in the other direction. It's the same concept. You're going to get a reversal bar, and you're going to identify your areas inside of favorable large triggers. We're looking for that fib, midband, or one-to-one that's enveloped inside of those large and synthetic overlapping. And as hard as it may be, these areas that fall beyond the large triggers are outside of the window. We're not looking at these areas for entry. My job is to activate a limit order just below that window and wait for the market to come to me. So I wanted to show a couple extra pictures of that window of opportunity. My limit order goes right here above that mid band, maybe 79.21. And if the market gods are being generous, it's going to retrace, whoops, and it's going to kick me right out of Discord, guys. I'll be right back. And I'll keep talking while I do it. And guys, for those of you that have been with me for a while, I know today feels like I'm slowing down a little bit. I think that's important. I want to make sure that I'm not leaving anybody behind. So David S., Marshall, I want to make sure you're good. Who else do I have in here that's new, that's on a demo maybe? Or maybe somebody that's just coming back, right? Trying to get back into the groove. This is your class, and this is what we're looking for. So let me get my screen back up. Discord is messing with me today, and that's okay. If we get that small retracement counter to the underlying trend, guys, and it hits my limit order right at the top of my window of opportunity, I'm in a long position. And I'm in that long position with the advantage of momentum because my 13-2 chart had strong trigger lines. I'm in that long position with no termination conditions, the advantage of a clear path. And now I've entered that long position with the advantage of the entry area where the market is likely to continue, guys. And I'll take this trade 1,000 out of 1,000 times. My initial stop will go below that window of opportunity because that is the area where the market shouldn't go, right? Stops are placed where the market shouldn't go. If the market extends beyond this window of opportunity, I no longer want to be in the trade. I've given away the advantage of that entry area. The market has other ideas. I don't control it, but I know where that stop goes. So if things don't go my way in this particular trade, I can get out, I can minimize my losses. But the reality is, with those advantages in place coming from a termination condition, guys, this is a trade that typically wins 70 to 80% of the time. Your job is to go back test it. Because if you go back test this look, you're going to recognize that that's a pretty accurate number. Because you waited for the pullback to the area, you've minimized your risk. And once it begins to move in the direction of your trade, guys, your stop is going below that reversal bar. And because you waited for that pullback, your opportunity for profits grows exponentially as we work our way to the next Fibonacci area. Guys, this is your high probability trend trade. If you spent 20 days focused on recognizing nothing more than an entry, recognizing that 100%, that perfect, that rules met entry, guys, checking yourself and everything you do up against a checklist. And I'm going to give you guys this checklist right now. This checklist identifies the rules for the absolute highest probability trend trade. The market needs to be coming from that good top or bottom, right? That termination condition that no trigger lines broke through creates a full reversal. This one's going to increase your likelihood of success. But it's not mandatory. You can still have a great trade if you have odds favorable momentum, if you have no termination conditions, and if you have an area inside of favorable large triggers, guys. So I just dropped this checklist into the room for you. Please steal it and use it. And then for my new users, as you get comfortable, oh, you're welcome, David. Here's that exact same checklist. And guys, I'm not going to lie. I'm a little lazy sometimes. I stole pictures right out of the manual. What's it mean to have a good top or bottom? Well, it means that this termination condition creates a full reversal, gives me odds favorable momentum. Well, what's odds favorable momentum? Here's a picture right here, straight out of the manual. What's a termination condition? Guys, there it is. And then what does my area look like for entry? There's a short and there's a long, straight out of the education tools, guys. So keep this one on your computer. Study it in the morning before you start, right? Get comfortable with what you're looking at. And then that friendly reminder, your job for the first 20 days is to do nothing more than entries. And David, I realize that you're brand new. I want you to give yourself a little bit of time, right? Just a little bit of grace. It's okay to be new. It's okay to be a student. It's okay to admit that, hey, I need to get this down before I start growing from it. You've got the rest of your life to be successful. And this is an example of how to write yourself a trading plan for your first 20 days. And guys, I encourage new users, just steal it. Steal it and make it yours. But use the phrase, my trade is, and all you're doing is defining an entry. That's it. My trade is the high probability trend trade. And to enter the trade, I must have the conditions of this checklist met. Here's that same checklist. And then your job, remember we said you're going to take a lot of pictures? Take pictures of the perfect entry. Take pictures of longs and take pictures of shorts, guys. I want you to study. We're about to talk about how to study. I want you to steal pictures from class. Every time somebody posts it and I say, man, that's a perfect high probability trend trade, I want you to steal it. I want you to grab them from the manual, but for the first 30 days, the more pictures you take of your charts, the faster you're going to get to where you want to be. So take pictures of it and put a couple of them into your plan. And more importantly, guys, 180 pictures of perfect entries, of rules-based entries. And this is not only high probability trend trade entries, guys. This delves into that medium, that 50-50, showing you those perfect entries too. Steal my spreadsheet, guys. I'm totally cool with that. Use it, study it every morning. Take 30 minutes tonight and look at every one of those pictures. And all you've done is you've taken 20 days to define the perfect entry, guys. But you're going to have to manage that great entry. You're going to have to get out of a trade that you get into. What we've found over the course of history is that a mechanical, pragmatic, methodical approach to management in the beginning, while you learn to read your indicators, tends to suit people's needs. So I've included in this example plan the most mechanical approach I know. And notice that I keep it in the possessive. I keep it personal. I will trade 2 contracts. My initial stop will be 12 ticks, adjusted to below or above the window of opportunity initially. I'll move my stop, excuse me. I'm so sorry. I'll move my stop 2 ticks above or below the reversal bar in the direction of my trade, guys. This is methodical. It doesn't require any opinion from me. I'll take profits on my first contract at $100, and then I'll move my stop to break even manually. Guys, that $100 gives me a dopamine kick. That $100 creating confidence through the memory of success. And now I have absolutely nothing to lose on a trade as I see if it goes to my second target of $200. This is all, it omits opinion, right? It's 100%, it's methodical. You're going to have a lot of $100 and break-even trades in the beginning. You really will, because you haven't figured out how to read your indicators yet. But every great entry picture is an opportunity to start working on a management plan. As you keep it methodical in the beginning, you're going to be able to grow with that plan as you grow with the software. And here's why we keep it so simple, guys. If you focus on this for your first 20 days, if you focus on great entries and mechanical management, you're going to understand how to read your charts. That's my goal for new users, is to understand how to read your charts. And you'll understand fluently where the market is likely to continue, and then you can take a mechanical checklist-based entry at those areas. You're going to understand where the market is likely to stop. It's going to be a giant red flag saying don't trade into this area. It may reverse the market. And you're going to understand where the market is likely to go. And that's going to help you develop a management plan as you be able to read, as you learn to read. The idea is to build a foundation that's capable of winning consistently. Let that ring for a second, guys. You're building a foundation capable of winning consistently. Keeping it mechanical, keeping it a proven methodology, a methodology that's been proven to win more than it loses. You're creating a plan. As you learn to read your indicators, as you grow your knowledge, you have something foundational that has been proven to win more than it loses, guys. What a great way to get in and keep it simple and have the odds in your favor while you begin to develop a management plan, while you begin to develop maybe a different trade, a medium probability trade. So I'm going to put this example plan in the room as well. I am going to encourage you guys to write a plan, to have it revolve around simplicity, to have it focused on entries. And then I'm going to do the second half of this one, guys. And I do this, and not a lot of people take me up on it. When you write your plan, email it to me. Let's put eyes on it. Let's talk about it. But guys, it's not a plan if it's not yours. Don't just send me my copy, right? Your plan is going to have pictures of your trades, of your looks, of your study going into it. And the easiest way to study, looks like that market dropped, right? Is I'm going to open up my 13-2 chart, guys, and watch this. If I can go to a 2 triggers only, so all I have is trigger lines. And I'm going to scroll back, and I'm going to use a circle tool. Smalls are still outside, but they're returning, but they haven't weakened yet. There's one of those little tails. I'm going to circle it. Smalls below the large. We have a tail at the beginning of momentum. We have a tail at the ending of momentum. All I'm going to do is circle these, and I'm going to keep scrolling back. Guys, give me a Y in the room if you see that all we're doing is looking for that advantageous momentum. And if it's present, let's circle a tail. You ever wonder how many trades, how many rules-based opportunities there were in a day? At the end of the day, you can go back and do this, right? You can look for these tails, circle them, and I'm just going to do it for the day. Look at that. Odds favorable. Once again, patterns repeat themselves. All we're doing is we're developing trust in the patterns. Whoops. I missed my circle. And for the new user, that's not advantageous momentum, is it? So we're not going to circle that tail. So guys, this is the first half of study. We're going through historically and recognizing these instances where the market provides the advantage of momentum. And you'll notice that there's space in between those advantages, right? It's not always present. The second half of study is I'm going to go ahead and I'm going to put my indicators back on. I have the advantage of momentum, so now every place I circled a tail, I'm going to make sure that it's not trading into a termination condition, which means that I haven't reached support, one-to-ones, a divergence high, resistance. And guys, here I've reached a mid-band, but this mid-band doesn't scare me. It's not a termination condition. When we talk about mid-bands as termination conditions, my large triggers have to be a full bar away because price is likely to snap back. They're not in this case. So this one, I'm going to keep the circle. It qualifies. Here, smalls have broken through, but the large have not. Guys, this is going to be one of those 50-50 looks. One of those potential to breaks, but it hasn't broken yet. As we come back, price reaches the fib. Absolutely none of the trigger lines have broken through. Even though this market continues up, I'm not looking for that entry. But here, the small triggers have broken through, the large triggers have not. Once again, odds favorable momentum says that we have the potential to break this area. I'm going to take a look at these tails and see if an opportunity was present. So guys, so far so good. Here we go again. Price reaches support. Absolutely no trigger lines break through. I'm going to remove this circle. No area reached, guys. I'm going to leave this one. So over the course of today in the S&P, we have 1, 2, 3, 4 opportunities that we're going to look for. So I'm going to minimize, and now I'm going to bring up my 5-1, and I'm going to scroll back to that first circle. And price comes back to an area of resistance inside of favorable large triggers. Do you guys see it? Give me a Y in the room if you're with me. The smalls are still outside the large. They've broken through the area, which means this area has the potential to break with momentum. Smalls are outside of the large. That's a great look. I have odds favorable momentum here. It pulls right up to the bottom of that window of opportunity. Watch this, guys. How do I figure out the window of opportunity? From the top of the triggers to the bottom of the triggers. For a short trade, from the highest point of resistance to the lowest point of resistance. And my job, because of the momentum, is to enter the trade right at the bottom of the window. And if you're in at 25, guys, down here at 05, that's your $300 trade. So the idea is that you take this picture, right? You're studying historically. If you use Snagit, you can drop your checklist right on there. If you're not using Snagit, guys, if you're using that capture software, you're going to have to type it out. I had odds favorable. I had no terminations. I had an area for entry. This one fits the rules. So I'm going to share it to screencast. And I'm going to pull up my spreadsheet. Whoops. There was a link hidden in there. And I'm going to put this one in, and I'm going to come back and study this one, guys. And this is a 50-50 trade. This was a medium probability trade. But it was 50-50 perfect. And let's talk about what a 50-50 is, guys, because I think I missed that when we talked about termination conditions. We talked about all or nothing in our termination conditions. When we talked about whether or not an area was likely to hold, we talked about price reaches an area, no triggers, no trade. Small and large breakthrough, we have a clear path, the area is broken. Here's that first medium probability trade, that 50-50 trade. When the smalls smash through the area with odds favorable momentum, guys, and this is a key. This is an area with the potential to break, which means that if the entry is perfect on my 5-1, no divergence, small window of opportunity, strong trigger lines, I'm willing to take that trade as my first medium probability trade. Smalls below the large, odds favorable. The large haven't made it through. Picture perfect entry, no divergence, window of opportunity, and the market continues down because it's coming from a good top or bottom. So I'm just going to continue this process, guys. So there's one, right? If you're following rules, if you're pragmatic checklist, you made your $300 on that one. Let's scroll back to the next circle and scroll back to the next circle. And look at this. Are there any areas inside of favorable large triggers, guys? There's some below, but there's nothing inside. Because there's absolutely nothing inside, guys, no matter what happens, I can't label it as a high probability trend trade. Doesn't mean it's not a good looking trade and not a trade that you may take one day. But I'm not going to add this one into the mix because it doesn't fit the criteria on my checklist. Does that make sense? I'm not saying, oh, but it went down, let's count it because it makes me look smart. What I'm saying is my rules aren't met. Because they're not met, I'm not taking a trade, guys. Those are my only two options. Rules met or rules not met. So let's go through. Here's our next circle. And if I scroll back, and this is about 6:30 in the morning, the smalls are through, the large are not. I do have strong triggers, and it does pull right back into an area of support inside of favorable large triggers. And then this one doesn't quite make it, but if you got in at 81, you made your 100 and you probably got stopped out break even as the market pulls back to an area of support inside of favorable large triggers. The smalls are still outside. Because divergence prints, a lot of you aren't going to take this trade. That's okay. We're not going to count it because that loss of momentum on the 5-1 says that it's not high probability or my best 50-50. But guys, that's an amazing looking trade. And you'll add it to your list as you grow with the software. And then as we come back, there's a medium probability trade. Weak triggers, and it pulls right back to resistance right at the large triggers. Did the video freeze, guys? No screen? All right. Did that bring it back? Guys, do you have visual? Yep, okay. So do me a favor, ladies and gentlemen. If you ever feel like you've lost audio, if you ever lose visual, I want you to tell me instantly. Because yesterday I rambled for 10 minutes with nothing. So guys, no odds favorable momentum. It doesn't fit the rules. Even though it continues down, it's not a high probability trend trade. The reality is it has a clear path. It has that area right at large triggers. It has 2 out of 3. My small issue is that I don't have my best momentum. And notice how support breaks and price pulls right back to resistance that used to be support, guys. This is another great trade that you'll add later in life. But right now we're going to focus on the best of the best. And it doesn't get any better than this. Termination creates a full reversal. Full reversal creates odds favorable. Odds favorable gives me the reversal bar. You guys want to find an entry together? And then we'll take a little break and we'll get to the live market. Ready? That's your look on the 13-2, guys. So we're watching the 5-1 over here. And what are we looking for on the 5-1? To designate our window of opportunity, guys. I see 1-to-1s and I see resistance and there's a mid band up there. David, do you remember? Marshall, do you remember? What am I waiting for so that I can identify the area where the market is likely to continue because of the advantages I have on the 13-2? Man, it's going without me here. What am I going to do? Guys, anybody? Can you hear me? Am I talking to myself? Because I know this stuff. I'm waiting, right? What am I waiting for, Folger? Waiting for the pullback. Exactly, Marshall. And what lets me know that the pullback is happening? Boom. There's my reversal bar. At the time of my reversal bar, guys, I'm just going to circle my large triggers from the top to the bottom. How easy is that? Now I'm going to identify my window of opportunity. From the highest point of resistance inside of favorable large triggers to the lowest point of resistance, right at those large triggers, and I'm going to take an entry. I'm going to put my entry a tick or two below that lowest point of resistance, and let's make this entry color sienna. No, can't see it. Let's make it seashell. So there's our entry. Is everybody comfortable so far? Here it comes. It's still on its way. Oh, the anticipation's overwhelming, isn't it? Coming up, coming up, coming up. And guys, you're now in the market. It's 73.07. Your initial stop is going to go up here if we're being pragmatic. Your initial stop is going up here where the market shouldn't go. Everybody comfortable so far? Jose, you're doing Apex, correct? Sorry guys, we're going to interrupt 1 second, see if we can help Jose. Jose, have you considered using NinjaTrader 7 for your analysis and running one chart for only execution? NinjaTrader 8. If you have a license for 7, that tends to help a lot of people that are struggling. Yeah. That's what my setup looks like when I'm trading Apex. I don't have any pictures. Maybe I do. I've got analysis on 7, analysis on 7, and then I've got entries on 8 because I only need to be on 8 for that prop firm for the execution. And that helps me a lot and keeps me out of a lot of pain in the butt. Yeah, some days are worse than ever. So Jose, there's a ton of movement today. There's a ton of tick data coming through. There's a lot of stress on your video card today. And I can't find a lot of rhyme or reason. And John Novak's found a lot of patterns that create problems. And I know that you've already seen this. Running through that. Sometimes, Jose, if my workspace, like if I crash a couple times, I'll go to NinjaTrader 8 under workspaces, and I'll get rid of not only recovery, but I'll get rid of that workspaces as well. And then I'll come through. And sometimes that gives me a little bit of goodness if you want to give that a try. All right, I apologize. So guys, everybody's with me, right? Termination creates a full reversal. Full reversal creates odds favorable. Odds favorable with no terminations. I get a reversal bar, and I'm now filled at 73.07. My initial stop is outside of the window of opportunity where the market shouldn't go, and it looks like it's about 8 ticks. There's about $80 per contract. My first target, if I'm in at 07, is 97. Guys, this represents $100. My second target, the market has to get to 87. That represents $200. So we're all good. Entry just below the areas inside of favorable large triggers. Because of that momentum, guys, I don't want to stumble over pennies and miss dollars. I'm in the trade, and all I'm waiting for is that. Here's my reversal bar. The market's now moving in the direction of my trade. I'm going to reduce risk to 1-2 ticks above the reversal bar. I now have 3 ticks per contract. I'm risking $60 total because I waited for the pullback to the area inside of favorable large triggers. My first target is reached, guys. I have $100 in the bank. And look at this. I have 0 risk. My only options now are either this stop gets hit and I get $100 in break even, or the market continues down. And there's your second contract, guys. There's your $300. That's the whole process, start to finish. New users, I'm going to see a lot of you jump out right here, watching those upticks rather than trusting the momentum in the clear path. It's just part of it. New users, I'm going to see a lot of you jumping in right here rather than the best area because you're afraid the market's going without you. So what you're doing as a brand new user, guys, is you're developing trust. I'm going to get rid of all of our drawing objects. You're developing trust through study. and you're taking this picture, both your entry chart and where the advantages come from, and you're writing your rules on that chart. Strong triggers, yes. No terms, yes. And then guys, this one's real important. Vocalize the entire process. Area for entry inside of favorable large triggers. And why do we go from the bottom for resistance? Because of this momentum, guys. If you tried to save $1 and put your order at the top, you had to watch all those sellers go without you. Share it to screencast. Put this picture in your trading plan, but definitely put this picture into your spreadsheet so that you can come back and study it. Paul, put a ticket in Discord. What do you mean you broke them? Show me a picture. Maybe I can get you fixed without having to do that ticket. And guys, give me a Y in the room if you're with me. Your first 20 days is finding entries. That's it. And then from that first 20 days of entries, you're going to start to work on management. And then that management is just going to expand a plan, guys. Termination, no, don't send them an email, Gary. Follow the protocol, right? What's the protocol? If you need help, the quickest way to get help is go to tech support. He does because he's amazing, Gary, but the reality is you're going to get more done quicker like that. He responds in minutes because he monitors everything, but that's the way to do it. It keeps it more organized for him. He makes sure that everybody's taken care of in order. Paul, when you say you broke your crude charts, are they all gray? Did you lose a workspace? Yes. So I want you to do this, Paul. I want you to right click. Nope, do this. Guys, there's probably a data problem. I want you to right click, and under days to load, I want you to change it from 10 to either 9 or 11. There's probably one little tick something something in there that's jacking up the whole party. If you change it from 10 to 9 or 11, it typically fixes it. I know this because I had the same problem and Jason fixed me. And what do you think, guys? One more time. Isn't it amazing? Patterns repeat themselves every day. Every day, these patterns are going to repeat themselves. Your job is just to commit them to memory so that they become easy. Guys, that's our first hour. Well, that's our first hour in 20 minutes, right? What do we see right now? We see large triggers up and small triggers down. Everything is above the 1-to-1. Guys, I don't have the advantage of momentum, right? I don't have the advantage of a clear path short. You're welcome, Paul. I'm in a holding pattern. Crude oil's not giving me advantages, so I'm going to come look at my S&P. There's odds favorable momentum directly into a termination condition. I need those small triggers to break through with odds favorable momentum to even consider a medium probability trade. Guys, look at how fibs hold. Isn't it amazing that you know exactly where the market is likely to go? You know exactly where the market is likely to stop. Welcome to Nexgen, guys. You've got the exact same areas that institutional traders are looking at. You have the exact same areas that the sharks, those big money investors, guys, they're reacting to the same fibs as you. Sometimes they want to break them, sometimes they don't, but we know exactly where that reaction is going to happen or has the potential to happen. We can be remoras, guys. Let them create momentum. Let them create All those advantages, that clear path. Stay away from those areas where they may react, right? You don't have to be first. Remember your place in the market, guys. Unless you've got $1 billion in your account, you're not moving the market. Trust me on this one. I'm going to leave you with the S&P. It's moving fantastic. I love it. I'm going to take a little break. When I come back, we'll get into that second hour. We'll look at some of the pictures that you guys have been posting. And this is your opportunity, guys. If you've been sitting through this first hour and you're like, WTF did he just talk about? What the heck is odds favorable momentum? How could I possibly identify a termination condition? This window of opportunity nonsense feels like grade A baloney. I need to get better at it. Guys, this is your opportunity. Participate in your own education, right? Take control of your destiny. Post in the room. There's nothing too trivial. I want to answer every question. I really, really do. But right now, I'm going to go refill my water. So, post your pictures, post your questions. I'll be back in about 5. We'll get into that second hour. I'm trying to post a picture, the break picture, but it's not working. If you are brand new and you don't have a post to show me, you don't have a trade to show me, do me a favor. Take a picture of your chart. Tell me what you see. Just read your indicators. And it might be as easy as, holy smokes, Mark, this was great momentum. Where was my entry? And we'll talk about the rules, right? Because there wasn't one. Not as a new user. And guys, it just didn't really give you one. Sometimes it's just not your money. You have to sit on your hands and wait for that advantage. Guys, I'll be back in just a few minutes and we will carry on. All right, ladies and gentlemen, I am back. Remember, becoming a confident trader ASAP, posting trades in class, guys. That was the first part of the equation, wasn't it? So a lot of you have done that today. I'm going to scroll up to the very top. We're going to start looking at some of the pictures you guys have put in. And I just want you to see, as I scroll up, I have to search for your pictures, which means that I have to scroll back down if you ask a question. So I'm going to be going back and forth, back and forth. If for some reason I miss a picture, if I miss a question, do me a favor. Just go, hey, Mark, 8:45, man, we had one. You missed it. Will you do me a favor and go take a look? Or just repost it. Go, hey, you missed one. I'm going to repost it. Here we go. Um, I never, ever skip anything on purpose. Gary got us started off today. Gary, you've got a trending market, it appears. That thing's just cranking up, isn't it? No termination conditions, not odds favorable. It's just trending strong. You don't have an area inside of favorable large triggers, so you chose not to take the trade, it looks like. Nice job using a checklist, following rules. And then here we have that pivot stop out. So we do have the termination condition, right? Pivot stop out, Gary. And we talked about this one in class. We reached the mid-band, and I like this look, guys. This is a good pattern. So we do have a termination condition, right? We have a pivot stop out, trigger lines don't go through, and then it gives a full reversal, gives us odds favorable. The key is we didn't have an area inside of favorable large triggers right here. So it's not a high probability trend trade, as much as we want it to be. And then Gary, if you were playing that HVA rules game, the rules were certainly met right there, and then you would have had to hold on. Actually, no, because the mid-band was reached. So, guys, this is that one that we said didn't fit the rules for the high probability trend trade. And as a result, Gary, you didn't take it either. So great job on that. The hardest thing about being a day trader isn't knowing the rules, guys. It's understanding when the advantages are present and taking advantage, and then understanding when those advantages aren't there and sitting on your hands and doing nothing. This is Ron taking chart reading outside of the high probability trend trade, guys. It's a termination condition that creates a full reversal. That full reversal gives incredible momentum, and Ron has developed a little bit of a plan that when the bars are still outside of the triggers, he's looking for that little smack right onto them to get back. Beautiful trade, excellent chart reading, guys, and that is an effortless $240 that all hinges on odds favorable momentum and a clear path. Ron, nice job. And you know what's cool? And this is such an important thing. We talked about writing a plan. Oh, I'm not, Ron. 99% of the trades that Ron posts in this room look exactly the same, guys. One of the ways you start to recognize that you're becoming a more confident trader, a profitable trader, is you become picky about what you'll take. You really start to stay focused on the best, and you're willing to let everything else go by without any real concern. And I think that that's what we're seeing in a lot of you guys that are coming through. You want to turn off tick data and NT8 on your 5-1, Paul? So right click and go to data series, and it's going to be just a couple down. You're going to see a box that says tick data. Just click the tick, and you'll be good. And maybe it's a platform issue today, right? So if you go to the settings, you have to go Tools, Options, Market Data. And then from there, There is one that's universal across the board that just eliminates your ability to have tick data. And if you need help finding that, let me know. I can fire up my NinjaTrader 8 for you. Gary, great recognition here. Termination condition, termination condition. The triggers haven't rolled, guys, and this is such a key part of what he's talking about, is if this bottom is really going to be a bottom, these triggers on the smaller, faster charts are going to roll. They're going to go from red to green. Your large is going to roll, your synthetics are going to roll, and then you're going to have that good bottom in place. Until then, this is an area that may create a reaction. This is an area that may create a bounce that takes you out. Look at that. You can see the bounce right there. But if it's really going to put a bottom in, everything's going to roll. Remember, we don't have to be first. We're the remoras. We're waiting for the opportunities. And then Paul, anything can happen triggers. Anything can happen triggers. Areas outside. And Paul, you made the decision to sit on your hands and wait. Great job. Guys, 4 types of pictures you can take, right? Take a pre-trade, where you take a second and you ask yourself, are my rules met for real? Take a during trade. Hey, I'm in here. Has anything changed? I'm going to go back and this is going to help me build a management plan. Take a post trade. Well, what happened? Let's see what the reaction was. If you lose, don't just get pissed off and not use it as a study tool. Go back and take a look. And then finally, guys, and I think this is my favorite picture, is the no trade. Annotating your charts. My rules aren't met. It looks good, but my rules aren't met. I'm not taking the trade. And Paul, great job. Looks like that one kept you safe. And then Gary, you took the entry. And I love it. Took it out of frustration. And you never actually got a signal, Gary. Remember, we go back to those. A reversal bar is not a signal. Remember that little look on there? When you talk about market flow, guys, when you add this next chart in, whoops, wrong one. Gary, make sure that you're studying what actually is and is not a signal. I like that you recognized that you broke your rules and you made the decision to exit the trade. Oh, that's not my trade. I broke my rules. But that is not a signal. It's only a reversal bar. Nice job, Gary. Takes a lot of self-awareness to do that. Whoops. Jose. 50-50, right? Smalls are below, but the large are not. You got those split trigger lines. That's a tough one, Jose, because you were 50-50 here, right? Which means that it's not a good top, which means that it pushed right back to support. Your entry is good, and you took the short right down to support, and then you tried to get that next run. And at that point, it's just tough. It's split triggers. And even though we're looking for termination conditions on the 5-1, when I've got 2 sets of Fibonacci as well as 1-to-1s and no trigger lines have broken through, it's probably going to lessen the chance of this 50-50. Does that make sense, Jose? That's something that we probably haven't talked about before. I don't typically look for terminations on the 5-1 beyond those 3 divergences. But if I'm stacked in an area, this is a reflection of a lot of psychology of areas that are likely to hold. I might use that as a little bit of a red flag. And then Gary, beautiful, termination, full reversal, odds favorable. Guys, look at that entry. Remember I said we're going to steal these? Gary, that one's mine. It no longer belongs to you. I'm going to liberate that picture because that is about the best of the best. And I'm going to go back and study that. And I'm going to make sure that I can do what you did, Gary. Out freaking standing. Paul, you going to show me the same thing? Paul, you missed the first one. You got the second one on the 50-50. Were you rebuilding charts when this one's set up? Because this one makes me giddy. That's still a good look, Paul. But now you've got a little bit of trouble, right? Divergence coming through. Looking for those quick profits. Getting to break even. If a lower divergence prints, you're out of the trade. I like it. Great management. Mark W. Is that a buy? No, silly. That's 2 arrows on a tail. All right, Mark. And I love that you asked the question, is this a buy? Mark, are you with me in here? Whoops. All right, so let's do this together. And this is how, Mark, we're going to get to that next level. Do you have odds favorable momentum? Are the smalls above the large? Are the large widening, angled, space between the two, letting you know that the odds are favorable for the market to continue up? Do you feel comfortable saying that that condition has been met? Rule number 1. I agree 100%. And now here's the second half of it. Remember, this is the top of the bar in question. The smalls are through, right? The large are below. So can we say no term, no termination? And we know that it's a 50-50 because the smalls are below. Whoops. Or the large are below, but the smalls are above. But Mark, it's that odds favorable momentum that's creating that awesome advantage right here. So we're going to say yes. If the conditions are perfect on your... Of course, Joel. I won't even make you wait. There it is. Whoops. Hit the wrong one. Sorry. All right, Mark. So we got that 50-50, right? Which means that it's got to be perfect over here. And look at how perfect you called it. There's absolutely no divergence. That's perfect. And look at this as well. Strong triggers. And then Mark, there's your area of support inside of favorable large triggers. And that's a small window, wouldn't you say? So Mark, you tell me now. Is this a buy? Is that a rules-based trade? What do you think? Does it fit the rules of the checklist? And this is the progression. We go from is this a buy to look what happens when we change it. Are the rules met? So Mark, I refuse on principle to answer your question, but I feel like you have all the information that you need now. Let's get everybody in on this. Guys, is this a buy? Is this a rules-based entry? Folger says yes. Ron, Tony, Joel. Small window with the one-to-ones inside of large triggers. Beautiful. Marshall gives me a hell yeah, Luciano. So Mark, this is what we do. I'm going to save, actually, you know what, I'm not. I'm going to take your picture. And congratulations, Mark. You just made the spreadsheet, my friend. Because you could not have shown me a better looking long. Does that make sense? So now your job is next time you're asking, is this a buy? Write the rules. Yeah. But if you write the rules on it, doesn't it completely negate the need to ask that question? And that's our goal right now, is to get to the point to where you go from, is this a buy, to are my rules met? And then once those rules are met, you change that to buy here. Yeah, great job, Mark. This is why I like this class so much, is I can start to gauge where you guys are by the pictures that you send. But there's a reason that I encourage you guys to annotate charts. There's a reason that I say this until I'm blue in the face. It's because if you annotate the charts, guys, there's no question. You don't ever have to ask me if it was a trade. The only thing that you have to ask is were my rules met, and you can answer that right there on your chart. So thank you for that picture, Mark. That's awesome. And I know that it's hard when you're brand new. It kind of stinks to put pictures in the room. You're like, ugh. Reversal trade. All right, so Mark, I don't own a reversal trade. I just don't. So let's do this. All right, so Mark, which way are the large triggers facing? And let's just talk through it, right? This is what I do before I get into a trade. This is the conversation that I have with myself. The large triggers are up. No, that color doesn't work. And my small triggers are down. So if I ask myself, odds favorable momentum, it's a no. It's a 50-50 up top. It's a 50-50 at the bottom. My synthetics are up. My large are down. My smalls are down. But I've got this giant area of support. So Mark, not a reversal trade because price has already reached your target. And what is a reversal trade? Let's change the terminology from reversal trade to a trade that happens after a top or bottom. And that's what we call an HVA trade. And that termination has to be true, and we can't reach the target yet, and the trigger lines have to roll. And this is a trade that you're going to kind of pick up on your second wave of picking up new trades is that HVA. So the one thing that I like to do is every time I have a potential trade is I want to make sure that I have rules for it. I want to make sure that I can provide a checklist for it. And this doesn't fit the rules for an HVA trade. The termination condition has to be true, no trigger lines through. Then the triggers must roll, and then there's a pullback that requires that 8 range chart for an HVA. That's your first shot, Mark, and we're going to get you to where you're comfortable with that eventually. But focusing on that long that you called, right? Recognizing the momentum, the advantages, buying or selling the pullback, that's kind of the way to go. Guys, this is a plan that's been with Nexgen for 20 years. It's been the same thing for 20 years. It's just changed looks a little bit. Define your termination conditions, wait for the roll, and then look for your opportunities. Great picture, Mark. Great question. And let's see where we're at. Ron C. Everything says down with odds favorable momentum. So you take a little money. Nice job, Ron. Marshall, let's see what you did. All right. So, Marshall, there's something that I'm noticing already. And I never want to call anybody out, and I hope this doesn't feel aggressive. But help me out here. Why? Why did you trade into a termination condition? Why did you forfeit strong triggers? Why did you trade with a loss of momentum? And why did you take an entry outside of favorable large triggers, right? So if you write your rules, we can talk, because my only observations about this one, Marshall, is that you broke rule number 1, and then you broke rule number 2, and then you broke rule number 3. So if this one works, it's going to convince you that this is a great trade. But if we go through and we look at this exact same scenario 100 times, you're going to end up on the short end of the stick more often than not. Does that make sense, Marshall? So get in that habit. Don't be too busy to annotate. You can always go back and annotate later, but write those rules on there. Did you win that one, or did it stop you out? Gary, everything says down, no divergence, rock star entry, boom, boom. I love everything about this one, Gary. You moved up your stop. So not only did you break every rule on entry, you started moving arbitrary stops so that it didn't get you. Well, at least you didn't lose money on it. I like it. That's a good thing. Gary, wow, what did I do? What do you think, guys? 50-50 doesn't work, right? Termination condition, ultimately a full reversal, odds favorable. Gary, good job not worrying about that mid band. And look at that entry, guys. 2 to 3 ticks of risk. I love this trade, Gary. I'm going to steal it. I'm going to keep building my spreadsheet, guys. I hope you're doing the same thing. Uh-oh, Gary, are you in here twice today already? Good morning, Ziva. You opted not to take it because of the bad... All right. And that's cool, right? So there's your gap right there. And I like it. I like the gap. And I like the recognition. I think no divergence, strong triggers. And it is a bad top, right? But it is a 50-50 that failed miserably, which suggests that 92 is going to hold. Does that make sense? So let's go through the words, right? So potential to break, but hasn't. If it doesn't, break, we can at least say it is an area that someone wants to hold. I guess is the best way to put it, right? When this 50-50 fails, they're telling you that this area with the potential to break isn't breaking. And then when you end up with these conditions after a 50-50 fails, Paul, clear path, I love this trade. And my stop, if he's in at 74, my stop's probably up here about 85, 86 on the other side of the synthetics. But if you opted not to take it because it wasn't a triggers below the area, nothing wrong with that. I think that's good recognition. I love this trade though, because the 50-50 failed. Because a 50-50 is an area with the potential to break, and it's told you that it's not going to. Folger, let's see what we have. Bad bottom, 50-50. Your area is down here, inside of favorable large triggers, right? Not above those. Folger, were you in class yesterday? Okay, I didn't think so. One of the conversations that we had yesterday, and let's do it again, guys. This is a great review. So Folger, 50-50, right? Anytime I have a 50-50, where's it coming from? Is that a good bottom or a bad bottom? What do you think? Because one is going to give you a better chance of survival, so to speak. I'm looking for my 50-50 picture. No, it's not a termination condition, right? Yeah, it should be a good bottom to increase the likelihood of this one working. But what we have is a bad bottom. Yeah, exactly. You're with me. So it's a bad bottom, and you recognize that, and I like it. So what happens is this 50-50 is less likely to work because when you have bad bottoms that pull back to a mid-band in resistance, a lot of times they love to continue in the direction of the trend. And then you've got that gap back. So if you take one shot on this 50-50 from the area here inside of favorable large triggers, which coincides with the pullback back to the synthetics here, that's your best shot, right? Like that's your best chance if for some reason this market's going to reverse from the middle of nowhere. And then your question about this one, how much weight does this hold as a termination condition? Does that make sense though? Let's not get ahead of myself. Bad bottom, 50-50 is less likely to work. Make sure that your entry is perfect. So how much weight does this hold as a termination condition? I love that question. And we're going to block out the rest because I think the lesson's done on the 50-50. Make sure that your entry is your best entry. So to determine a term, price must reach the area, right? Then we gauge the trigger location. Does that make sense, Folger? In order for a termination to be a termination, price has to reach the area. So what we're looking at here isn't a termination condition at all, is it? If you enter here, that's a target. Until price reaches an area, that red line is a target if your rules are met. When price reaches that area, then it becomes a termination condition. And it holds all the weight in the world if price reaches it and the triggers don't break it. Does that make sense? That was a great question. Termination right up to the mid-band, right? Check it out, guys. Large triggers don't follow. Closes the gap all the way back to the large triggers and just about to one-to-ones. There's that 50-50, not from a perfect bottom. That one doesn't work. No areas inside. The market pushes back up. Your trigger lines are below resistance. Your smalls are down. Your large are up. Dogs and cats living together. Guys, let it break. If it's going to break, it's going to break, guys. I mean, if it's not going to break, it's all going to roll. You don't have to be first. I think that's what I'm getting at here, is you don't have to be first. Wait for that momentum. Wait for the clear path. Give yourself every advantage. All right, Marshall, once again, anything can happen, triggers, right? Strong trending. I do like this. You are in a crazy strong trend, right? So you do have that advantage of a strong trending market. I'm going to annotate it for you. You do have a clear path. Wouldn't you agree? But we don't have odds favorable momentum. So what are we forfeiting? We're forfeiting the advantage of momentum. Does that make sense? And we're verifying that forfeiture over here with weak triggers. But 2148 is an area that has the potential to hold based on trigger line location. But your areas are outside of favorable large triggers, which means you're counting on one cute little pink line in the middle of nowhere to stop this market. And that's a lot of risk, forfeiting both momentum and an area inside of favorable large triggers. Does that make sense? So I like it. You're trading with the trend. Everything's red. Everything says down. It's just a little wonky. Is it going to go from here? Is it going to go from here? Is it going to come up and retest 27 because of the loss of momentum? You're guessing. You don't have a clear point where the market is likely to continue. And in a really strong trending market, Marshall, here's one thing that we notice. And this is going to be the big positive on what you're doing. When those small triggers are riding the large like this and the market is cranking down, there are traders that will just sell the ever-loving crap out of that mid-band until it stops working. And that's exactly what you've done here. I don't know that I would put quite that much risk on it because eventually it's not going to work. But what you're doing is you're banking on that trend. You've already gotten to the business side of that fib, and you're just looking for that continuation in what has proven to be a very strong trending market. Does that make sense? I don't disagree with this trade at all, especially in a strong trending market. Yeah. It's just when we have the classroom and we're talking about advantages and we're talking about disadvantages, I feel compelled to discuss everything that I see, especially if you don't tell me what you see. But you're going to get better at that. I'm not worried about it. We're going to be just fine, my friend. Of course. Folger, termination, right? Ah, but look at that one. Paul, is that the one you missed too? Folger, you missed it? Man, it was so close, wasn't it? Let me see something real quick. How did you guys miss it? Just curious. Did you not have an order waiting? Or did you have an order waiting too high? You were distracted? Totally cool. Paul, how did you miss it? And I'm just curious. Looking at messages on your phone? You didn't get filled. So guys, I'm just going to do this, and maybe this helps somebody. I hope. Here's what I see a lot. Are you ready? Here's your triggers. Here's your window of opportunity. Let me create it real quick. Whoops. From the lowest point of resistance, which is the fib, I'll just use this one, to the highest point of resistance, which is the midband. Is everybody comfortable with that right there? That's your window of opportunity. Guys, your job when the rules are met is to be a tick or two below that lowest point, right? Is to be a tick or two below that lowest point. Why? Guys, look at this. Insane momentum. Insane clear path. Guys, don't let one divergence with strong triggers make you miss a trade. I will, Ziba. It's next. I promise. That's the one. Don't miss this trade, guys. Don't get cute and say, well, this one divergence, I'm going to wait for a mid-band. Are you telling me you weren't willing to risk 3 extra ticks on this look? I'm sorry, Jose. I know that's frustrating. Jose, pull up 7 and sim. Don't miss your day because NinjaTrader 8's giving you grief. Pull up 7, take a deep breath. Oh, and go walk around the block. I love that trade. Folger, great picture. Ziba, termination. Right off those 1-to-1s. Everything says down. And you're a couple ticks below. And beautiful, beautiful hit both targets. Ziba, perfect trade. I mean perfect. You have gotten, your trades are boring, but you get paid, right? So who cares if they're boring? Whoops. Do you need to take any other trades? That's what I always ask people. We don't need to take any other trades, but we do because we're all adrenaline junkies. It's you guys that dang it. I'm having troubles with my spreadsheet. But Ziba, what's your win percentage? Do you know? Have you looked? 80%. High probability trend trades 80%, right? So Ziba, I'm going to ask you a silly question. Are you doing this to make money? Or are you doing this for the excitement? Because it seems to me that you found where the money is. So this $300 trade, you don't get nervous, you don't get anxious, your palms don't sweat. So that was a $300 trade, right? What if you had those same parameters on a 4 lot? It becomes a $600 trade. What if you have those same parameters and you're trading a 10 lot, right? And you're only looking for $300 on the trade? Maybe it doesn't have to be about more trades. Maybe it has to be about the best trades in Ziba. Maybe you just start adding contracts. Great job. Remember when you told me 2 months ago that it was like reading Chinese? Congratulations, you read Chinese now. Termination creates a full reversal. Full reversal. Guys, as you wait for those advantages, and they come in. Nice job. Gary, let's see what you did. Guys, class is flying, right? Snapback 1, snapback 2. Down here by the reversal bar marker, Gary's saying, I'm not going long. That's just crazy. I'm not going short, not going to fight that momentum. I'm just going to hang out, wait for rules to be met. Same thing. Waiting for triggers to roll, waiting for rules to be met. Becoming Persian. I love it. I love it. And guys, these are my proud dad moments. I take such stock in all of you guys that come in here. And I become so invested in watching you move forward. And Ziba, I got to tell you, it's amazing when I see you becoming so comfortable and confident with your rules. And when I have people telling me that they just got funded for their Apex account or for their Earn Trader account, or even when people just go, man, Mark, I was struggling with this And now I get it. Like, that's what it's all about, guys. Small steps forward, right? Waiting for advantages and realizing that trading isn't about being busy. Trading is about having odds favorable momentum, having advantages. Did anyone take this odds favorable clear path pull back to the 1-to-1s inside of favorable large triggers? Because it's still going. That was another $300 trade, right? Ziva, did you catch that one? That one fits the rules, right? So why did you, here we go. So here's the question. Oh, you only trade S&P? Okay. Check this out, guys. We're going to do it again. Oh, I got you. Then don't do that. Ty, you took it? Nice job. I love it. Ty, the first thing you say in class today is that yes, hell yes, I took a high probability trend trade. We were coming from a good bottom. Oh, let's put some color on that. We did have odds favorable momentum. We didn't have any termination conditions. And we did have an area inside of favorable large triggers. And guys, let's do the window of opportunity. From the top of the triggers to the bottom of the triggers. From the highest point of support to the lowest point of support. Give me a Y in the room if you see it. Does this fit the rules? If you missed it for any other reason that you were pooping or on the phone or something like that, guys, you've got to go back and you've got to tell yourself. How many of you missed it because you were waiting for the mid-band? That's okay. I'm not mad at you. Guys, this isn't a 50-50. You have zero issues. I mean, zero freaking issues. That's the best you could ever hope for, right? Entries come from the highest point of support inside of favorable large triggers, per the rules. Per the rules, right? So guys, don't trip over pennies and miss those dollars because you're waiting for a mid-band. So Alan, and let's delve a little bit deeper, right? Doesn't your stop still have to go out here where the market shouldn't? It does, right? You know that. So shouldn't you already be mentally prepared that this may push to the bottom to the mid-band? Sorry, that's a lot of arrows. I got a little silly on this one. And this isn't just for Alan, guys. This is for everybody. My expectation is that it's going to smash into the bottom of that window. That's my expectation. Every trade. But because I like the sound of cash registers, my entry is coming from the top of that window, and I will sit through that little push because I'm not willing to miss it because this is picture perfect. So guys, this is part of that trust thing, right? This is part of developing trust in the methodology. And when you focus on execution rather than whether you win or lose, that's when stuff really starts to come together. Execution says top of the window. Great lesson today. Because that's a couple that I've seen happen already, right? Marshall asking, is this better? Is the market coming from a good top or bottom? Termination, full reversal? Yep. Do I have odds favorable? Yeah, they're trying to accelerate, aren't they? No termination conditions. Large triggers cleared it. Area for entry. And there it is. Were you late, Marshall, on your entry? Because, and this is cool, because this is what new users do, right? Yeah. So the next step for you guys, and this is where trust is going to help too, Marshall. And I'm going to show you this. That reversal bar is where you start planning your window of opportunity, right, Marshall? And it's okay because you haven't been here long enough to trust, not the way I trust. And when that reversal bar prints, you've identified your window of opportunity. That's when that limit order comes in. What you're doing, and this is totally normal. I'm thinking, I'm wondering, I think it might, was that it? Oh, maybe it's the midband, maybe it's the fib, I'm not sure. Ah, shoot, I missed it. I did it all the time. Did it all the time because it just doesn't compute that fast yet, right? Yeah, and that's okay. So how do you get it to compute faster? Study these things. So Marshall, one of the things that you can do is watch this. Remember that little, you know that you missed it. That's totally cool, right? Do that bar by bar. There's my reversal bar. And it's trading way up. The second that reversal bar, boom, there's my order a tick above, right? I can't miss it. It got me. When that reversal bar prints, you're going to get so good at recognizing that window. Man, you're going to start waiting for this condition somewhere about right here. You're going to be like, okay, there's my areas. I know where it's coming. All I need is a reversal bar. And right here, Marshall, there's a lot of times where I've already, before I ever get that reversal bar because I know my conditions are met, and then when the reversal bar comes, I'm like, well, shoot, my midband jumped up. I'm going to change that. Does that make sense? And that comes through repetition, guys. It really does. None of you seem to have any problems recognizing odds favorable momentum. We all know when the advantage is there. The challenge is to wait for it. Most of you guys get really good at termination conditions within the first week. You know they exist, but now you've got to convince yourself not to trade into them. And guys, this is the one that's going to take a little bit of time. Pinpointing that area for continuation. And this is the one that if you study this look enough, right? If you go back and you circle those tails and you take a metric crap load of pictures, it becomes pretty easy. It's almost as though the market slows down. And that's what you're seeing right here. So Marshall, it's okay. Your entry, you knew where it was. Now you're just getting your brain to match your hands. And there we go, Exhibit A. Folger is waiting for it. Folger's like, man, right above midband, come get me, mother scratchers. And look at that, Folger, beautiful. Except for those shenanigans, arbitrary stop movements, come on. Come on. Beautiful entry. And if all you're working on right now is those beautiful entries, guys, this is one. It goes into my spreadsheet today. Beautiful trade, Folger. And now here's the second half of it. Are you ready? Every great entry has a management story, doesn't it? So this is what I'm going to come in and I'm going to say. Everything's up, everything's up, everything's up, everything's coming from a termination. Every trigger line on God's green earth is up. I'm going to annotate this chart. I should be holding for the fib based on my indicators rather than my gut. Does that make sense? Everything says up. And even if this pulls back, isn't it likely to pull back to an area of support inside of favorable arch triggers? How easy to keep your stop in place because you've got everything protecting you. So what was a beautiful entry picture, guys, now becomes Let me get that picture real quick. Grab it in screencast. Now I pull up my my management section and I create this link that says don't lose with every advantage. And you'll get to a point, Folger, where you're going to literally say in your head, these guys have to come get me. That's the only way I'm getting out of this trade. And sometimes they will, right? Sometimes they will. But you'll get better at gauging these advantages. Could you imagine being in this short and getting out on a one little spike up tick and then watching it go exactly where it said it was supposed to? Eventually you see that enough that you begin to correct this one. Guys, when I first started trading live, and I don't mind sharing all the problems that I had. When I first started trading lives, guys, I would take 25 trades a day and I would be up 20 ticks because I was so terrified of giving money back that I just didn't let the trades do what the trades were going to do, right? Remember, guys, everything that happens in one bar on the 13.2 happens in all of these bars on the 5.1. Let's see if we can make that a little easier to read. Is transparent an option? There we go. That's better. So do you see how that works out? This one bar, and guys, this is a great management lesson. If you get caught up on these little ticks in here, it's going to drive you mad because the advantages are still present on that one bar that leads the way. And this is one of the reasons that we use this as an entry chart, as a refinement chart, because we can get in almost to the tick right where that market's likely to continue. And it lets us reduce that risk so much that we don't have to worry about these little fluctuations on a smaller, faster chart because the large chart says, here we go. Does that make sense? Guys, that's a great management lesson. And now we're into a termination condition, guys. Nothing to do but wait and see if it breaks. Here we're into a termination condition. Nothing to do but wait and see if it breaks. So since we are double terms, S&P's got odds favorable momentum going into it. It's got a better shot than crude did. I'm going to take a few minutes. I am going to go reload my water. And guys, I'll be back in just a few. The last bit of class belongs to you. You let me know what you want to talk about. You let me know what you need help with. And I will do my best to provide that help. I will be back in just a minute. Folger, let's see what you did. Is the market coming from a good top or bottom? Oh, that's pretty good, right? But now we're trading. You went for the middle target. Area of support, 1-to-1s. It goes right to the bottom of the window, right? 50-50 up top. Smalls are breaking through. So you knew that it may, right? Isn't that kind of what we're looking for? You're not willing to miss the trade, but you're willing to keep a stop in place so that if it goes to the bottom of the window. Folger, I love everything about this picture. And then taking profits at the problem. Come worry, the reverse course, price started fluctuating at a fib. So you have to make a decision. If you're going to trade into a fib, just take profits at the fib and then wait for it to break, right? And then you're good to go. Folger, great trade. I have odds favorable momentum. My trigger lines are through the areas. Support represents my highest point of support inside of favorable large triggers. This is what we call a pre-trade picture. The market is coming from a good bottom, right? Do I have odds favorable? Yes. No termination conditions? Yes. Area for entry inside of favorable large triggers? Yes. Guys, this is a pre-trade picture. Give me a Y in the room. Are my rules met? These are my rules. My rules say that if this checklist is met, I'm obligated to take the trade. That's it. Why? Because this trade has been proven to win more than it loses. So let's talk about the other side of that. If something wins, what fib, Marshall? Did price reach it? Marshall, that's a target. Until price reaches it, it's not a term, it's a target. Does that make sense? And because I'm looking to enter down here, I've got room to my target. So we're not gauging the excuse me. Let me clear some stuff. I'm not gauging the distance to the target from the top of the bar, right? Otherwise, there's just nothing going on. But Marshall, if I buy a pullback at 41, it gives me $200 worth of profit to get back to that fib. Does that make sense? So guys, I went through my checklist, right? My rules were met. I've got enough room to make $200 to get back to that fib, and I've identified my window of opportunity. Guys, I am obligated as a rules-based trader to take this trade. That's it. That's what my plan says. And if it goes and hits that fib without giving me an entry, well, then it just wasn't my money. Does that make sense? And the second half of that, guys, who's going to jump in afraid that it's going to go without them? It's just not your money. But make sure, if it's not my money, it's because it didn't hit that highest point of support. Not because I expected a mid-band. Does that make sense? I hope that makes sense. If it's not my money, it's because they didn't get me at the most likely best of the best spot, not because I formed an opinion about where the market should go. because I don't control anything, guys. The only thing I control is whether or not my rules are met. And here's my segue over to my favorite quote. I guess it's a quote. When you stop expecting to win every trade, guys, anything that wins 70% of the time is mathematically obligated to lose 30% of the time. When you stop expecting to win every trade, you'll start winning most of your trades because you're not worried about whether you win or lose. You're focused on the execution of the method because the method has been proven to win more than it loses. It takes trust to get to that point. Marshall, termination, everything says up. Entry at the area. Quick profits, you kept your stop in place. At this point, Marshall, I love everything about it. Checklist trade. This is where, Marshall, my first profit's been reached, and now I'm coming into a potential bounce point. This is where I'll probably get rid of risk personally. I may go break even because at break even, I'm below an area of support inside a favorable large trigger. See how nothing is there anymore? So if the market comes all the way back down here, it's not a rules-based trade anymore, and I'll use that. Where's my stop going? Well, my stop's going where it's not an entry for a rules-based trade, into that point where the market shouldn't go. And if it comes back to 36, that's not a rules-based spot for entry. I'm okay getting out of the market there. Great trade. Great trade. It's going without us. You know what, Paul? Not my money. Marshall, I'm stealing your trade. And it's going in my spreadsheet because I want to be able to do what you do. Because the reality is if I can nail that entry the way you nail that entry, I've got a great chance for success. Target reached, right, Paul? You don't have that fib? You also don't have areas inside of favorable large triggers. Termination creates a full reversal. Full reversal pushes back to the midband and support. Support, midband. Guys, large triggers are a full bar away. One of the things that you see happen, here's a pattern for you, is that when these large triggers remain a full bar away, price has the potential to close the gap up to those synthetics. It's not guaranteed, but the fact that no trigger lines are through support is going to add to it a little bit. It's creating a spot for the market to react. It may or may not, but this is what we call the gap theory. And that gap theory says that if price accelerates away from the synthetic triggers fast and far and hits something Fibonacci based, it's likely to go close that gap back to the triggers. And by recognizing this pattern, it's not necessarily getting into a trade, but it's giving you an opportunity to let things clear, to let things catch up. What do you guys want to talk about? We got about 20 minutes. A lot of good lessons today. Whether you're new, whether you're old, whether you're experienced, whether you're learning, Billy Ray, Mark W., David S., how'd we do today? Tried to slow down a little bit, trying to keep it basic. Mark, a little more clarity today, I hope. David S., more clarity. That's all we can do, guys. It takes a little bit. Good. That was the goal today, Mark. I had you on my mind today. I wanted to make sure that you're keeping up. I want to make sure that everyone, because everybody goes at a different pace, guys. I had to hear the same thing like 800 times before it clicks. That's just me. I'm a little stubborn, kind of hard-headed. Thanks, David. I enjoy teaching it. All right, Marshall. Anything can happen triggers on a 50-50. And you're looking to enter not at the area inside of favorable large triggers. So let's see. All right, Marshall, here's your hard lesson for today. You ready? This is your truth in advertising lesson. It's easy to mark yes everywhere, right? Oh, this is the greatest trade ever. But the thing is the market doesn't care if you lie. Do you have odds favorable momentum? You didn't. No termination conditions? You have a 50-50. Area for entry? There's no areas inside of those triggers, Marshall. You've got weakening triggers at an area that hasn't broken and absolutely no areas for entry. Does that make sense? While you marked yes everywhere, the picture tells a totally different story. This is dangerous because if you can lie to you and get away with it, everybody else is going to be able to lie to you and get away with it. Does that? Because I've done that. And my favorite is people go, oh, when I activated this order, I thought that I had odds favorable momentum. That's one of the things. It is a 50-50. So you're giving away the advantage of momentum, right? Smalls are working inside, smalls are working inside. You're also giving away the advantage of a clear path. Marshall, that's your look. That's your best look. Separation. At this point, we're almost all the way back inside. So it's just not the best momentum there, right? Debbie, you took one trade for $1,200 today. Way to show off. You should post that trade. Let's see what you did. So Marshall, just make sure that you're being honest with yourself. Because what'll happen is you're recognizing rules you're willing to break by just cut and pasting there. And you can still take the trade if you want, but I think that if you're being a little honest, yeah, not quite a 50-50, so not a trade, Gary. I agree 100%. But if you kind of focus on that honesty a little bit with yourself, it's going to help out. Anything can happen. It's weak. Nothing to do. Marshall, does that make sense without sounding like I beat you up? I never want to feel like I'm beating anybody up, guys. I never want to give you any sort of guff or grief for what you do, but I want you to be aware of advantages, because when you're aware of the advantages, it keeps you focused, right? And the whole goal is to get everybody where they want to be. And everybody's going to get there at a different time. Since we have a minute, let's show the picture. For those of you that are new, I haven't shown this one in a while. You ready? Guys, here's that experience curve. Every one of us have gone through this, trust me. Here's my demo right here at the bottom. And man, this looks like fun. I can't wait to do this. I'm going to be rich. And you start counting your yachts and your islands and your cigarette boats and your mansions. And then you're like, whoa, I got some concepts I have to learn, right? And you're like, this might be kind of hard. And it doesn't have to be. And I try to gauge this class so that it isn't. And then, guys, this is your 30 days right here. This is the now I get it. This is the I'm so stinking smart, I don't know what to do with myself. This is where most people go live. This is where they put their hard earned money at risk without really understanding where they're at. I did it. 100% I did it. And I think that $5,000 is the Mark Novak story because I lost 5 grand in 22 consecutive losers. And I had no idea why I did it. The great thing is now you don't ever have to put that much money up to test your plan because there's prop firms. But right here, guys, is where you lose that money, where you feel a little dejected, where you're like, oh, maybe I'm never going to get this. I'm so confused. And you regress back to the I don't know shit stage. Pardon my French. Guys, this is, you ever have that World Series team that's down by 2 games and they rally? Or you have this obstacle and you just decide, I'm going to beat it? Guys, this is what separates the day traders from the people that say that they used to day trade. And this is where you commit, guys. This is where you commit to that path. It's that point, that self-realization, where you commit to the pictures, right? Where you commit to posting in class, where you commit to the rules, you commit to the lessons. And guys, this is where it actually starts to make sense. And this is where you put the work in. And this is where things really start to work. And this is where I get giddy watching you guys find success. And then Paul, when you started, you want to be the fastest to ever become a day trader. And now that it's been at it a while, you could care less, just enjoy the process. Yeah. And John says we all felt that way until the ass whipping the market dishes out humbles us. And if you don't blow out money, your money, you can stick around long enough to get the rewards, guys. And that's why Apex is so important. That's why these prop firms are so important for you. Because what they do is they let you test that plan, but they let you test it for a fraction, an absolute fraction of the cost. Because when it's time to test that plan, you have to accept that you might be a less capable trader than you initially believed. I felt entitled to win. My last name was Novak. I never took a picture. I never wrote a plan. I never participated in class. But I was absolutely 100% positive that I was going to be a millionaire by the end of the week. I wasn't sure how I was going to do that on a one lot in the ES, but I was going to. And if I had something like this my first time around, this Apex funding, instead of losing 5 grand in 2 days, guys, I could have paid, and now with the save 80, $34 to control 50 grand. $34 to control $50,000 worth of equity. And if you pass their test and you get funded, you get to keep the first 25 grand and 90% after that, guys. But what is that? $34, and you can have up to 20 accounts. So for $680 a month, rather than blowing out 5 grand, you can control $1 million. Guys, it's like trading $900,000 of your own money. This is where you test your plan. Use their money, and you're going to thank us later when you realize what you don't know about yourself yet. That maybe you don't react well under pressure yet because you don't have the trust, the repetition, those quick moving stops, right? Those expecting it to go to the bottom of the window. And when you can make money in a real world setting with someone else's money, you may trade your own money with their funded accounts. Guys, and remember, there's no penalty for being cautious when you start trading live. The actual harm comes from thinking you're a better trader than you are and blowing out a large sum of capital. The people that disappear lose tens and 20s and hundreds of thousands of dollars trying to do it their way. Now you have this Apex. There's no reason to do it. John says Melinda trades her money but added 20 Apex accounts. 6 and then said, why not 20? Just started a couple weeks ago. Melinda passed all of her accounts. $400 to $800 times a shit ton of accounts, pays a few bills. And guys, she has the same software that you have. It can be done. Simple trend trades, some patience. And he just wanted to boast a bit, guys. That's my big sister. Killing it. Passed. All of these are funded. It's pretty awesome. Isn't it cool that the CEO of the company, his wife, trade the exact same software that you guys trade? The CEO of the company and his wife take the same trades that we teach in this class day in and day out. Paul, good top, odds favorable, and because it's a good top, that 50-50, you're not worried about it. You take a beautiful entry, quick profits, nothing to lose, and you're looking for Fibonacci. Paul, I love everything about this trade. Maybe a momentum chance there, right? No divergence, pullback. It's right here. Maybe an opportunity there. Ron's going to show us a picture where he got in right here and exited right there. But Paul, it's been a while. I just want to remind you that you're really good at this stuff, that your chart reading is amazing. And when you stick to advantages, you tend to find success. I'm going to put that trade in my spreadsheet because I want to be able to do what you do, Paul. Joel. Odds favorable, 50-50, divergence prints. Did you choose to not take this one, Joel, because it looks like a 50-50? That's okay. Perfect. You're following your rules, right? Gary, same trade. You got in on market flow confirmation. That was one of those market flow signals, Gary. As you come back in, you said bingo 50-50. You got 12, you got 5, you got 12. Nice. Making money. Made enough for another chili dog at the beach. Man, what a great day. I'm ready for a little beach time. Here it's the coast. It's not the beach. But guys, we're hitting 95 in the Pacific Northwest this weekend. I will be walking in sand. Ron, I'll take a picture with a chili dog in my hand if I can find a chili dog place. And that's good. Gary, you're digging yourself out of the hole by following your lessons, right? By following your rules, by making sure that you have advantages. Guys, it's not difficult. The hardest thing about being a day trader is doing absolutely nothing when there's absolutely nothing to do, right? So there's that loss of momentum. It bounces. There's a second loss of momentum. It's pushing lower. Ron, when I come out that way, I'll rent a Harley. We'll go for a ride. Guys, there's your 50-50. One divergence gets you in. Two divergences manages you out, right? Debbie, do you believe that? Less trades, more contracts? Does it really? I should come tattoo at it. Those are fun. Less trades. Guys, my sister-in-law is super conservative. She takes only the best trades, but she lets her large charts lead for profits. She's one of the pickiest people I know, but she's pulling it off. Another week in the fall. I like it. Used to go to the one in Austin, down in Galveston. I always had a good time at those, the rot rallies. Wiener Schnitzel, since you have no beach in the hill country in Texas. Yeah, head over to Fredericksburg, right, Joel? Oktoberfest. You got Lake Travis. You have Hippie Hollow, Joel. Get out there au natural with the hippies. Oh, that's 200 miles. You're way out in the hill country then, huh? I do love the hill country. Guys, a lot of great lessons today. A lot of great lessons on trusting your entry. A lot of great lessons on being patient, right? You read the risk management strategy for take profit funding that JN posted on Monday. Makes a lot of sense how new users of the funded accounts only risking 20% of total contracts available. I like that. You know, John and I have this talk all the time, George. And we talk about we're in this to make money, right? Fredericksburg. Lee, you lived in Woodbridge for 50 years. Lots of history and rednecks. Yes. Take care, Ron. Mark, beautiful. 50-50 trade, right? So, Mark, instead of bad bottom, what you're worried about is the bad top, right? So, bad top on a 50-50. You take the perfect entry. You take quick profits. And when that second divergence prints on an area with the potential to break but hasn't broken, Mark, beautiful management, you get out for break even. So yes, this would be considered a bad bottom because in order to have a great top or a great bottom, Mark, the recipe is a termination condition. I'm typing it out. Creates a full reversal. And I like to add this one that provides you odds favorable momentum. So when we're talking about good tops and bottoms, Mark, and I have a fib here that you don't. Termination creates a full reversal, provides odds favorable. And when you scroll back, look how they just fluctuated, right? Never even made an area. 50-50, but here we have it right here. Termination condition creates a full reversal, provides odds favorable. That's a strong bottom. Termination creates a full reversal, provides odds favorable. That's a strong bottom. And then when you start looking at instances where that reversal isn't coming from a termination condition, it pushes down and ultimately finishes the move up to that key area. So 72.75 is that area with the potential to break. Your perfect entry was at the mid band. Your stop's outside the window. Gives you an opportunity, pretty easy, to make that $100 and go break even. And this would have been one of those $100 break even trades. Great job, Mark. Beautiful. Focusing on those entries, right? Focusing on those best of the best entries, creating manageable trades. Wonderful job, everybody. Solid work today. If you get, and George, I'm going to find that risk management strategy that John did. I didn't read it. I'm sorry, I got distracted. That was a total digression. Guys, have you ever seen, here's your homework for tonight. Have you guys ever seen Moneyball? 2011, Brad Pitt, Jonah Hill. So guys, Moneyball is about the Oakland A's, right? How they were underfunded and they're trying to compete. And what did they do? Rather than going for home runs, rather than going for all-star people, guys, they drafted people that get on base. They drafted people that got singles, that walked, that put themselves in a position to score, and they almost won it. They didn't win it. But the idea is the same, guys. Your high probability trend trade gets on base. $200 profit gets on base. You don't have to hit a home run to be successful, guys. 4 singles is a home run, right? Remember that. Give yourself the advantages every time you get into the market. Don't feel like every trade has to be a home run. And then Gary, 13-2 charts suggest termination is true. You're a tick off of it, right? So Gary, if this is going to be true, if it's only going to get a tick to it, you'll get this roll. And then if you get that roll and you want to try and take it down to the mid-band, good stuff. So guys, if you've never seen Moneyball, watch it and try and run the parallel. Getting on base is giving you advantages. Small increments get you to that final goal. And I think that's probably it for me today, guys. I enjoyed it. What a great class. Great participation. Great lessons, guys. I'm hoping, my goal for you is that you have an aha moment every day. Keep asking your great questions, guys. Put me on the spot. Make me give you great answers. I'll be back tomorrow morning, 9 a.m. We're going to do this again, and we're going to do this every day. Repetition, rinse and repeat, until eventually you get to where you need to be. And with that, I'm going to bid you adieu. Have an awesome afternoon, guys. I'll see you tomorrow. If you haven't written a plan, write it out, guys. I'll see you in the morning. Take care, everybody. is frustrating. Just let it be. True.